All right, yield nerds, this is an interesting one. I have put all my eggs in one basket, and it looks like I've made a terrible, terrible mistake. And I want to share my lessons with you, so maybe you will make a different decision. Let me tell you more. I'm up to 458 subscribers. Thank you for your support. If you're new to the show, please check out the Income Investing Roadmap, which is a playlist. There are a couple of others, one on preferred stock and one on yield, Super Bowl as we call it. And finally, before I get to the next step, I want to make sure you know that I may say things that are part of my education, but my conclusions may be wrong. So please make sure that you do your own homework. Well, four parts in today's episode. The first is to take a look at the market temperature and see how my putting all my eggs in one basket has worked out. Hint, hint, not that well recently. And the next part is where I see the next 2 weeks going in terms of key events in the market and my investment thesis that is educated based on where the next 2 weeks are going according to me and my holdings. Well, you may remember I always share how I perform compared to the NASDAQ. I am getting nervous here. The NASDAQ is starting to catch up with me and I am losing ground. Oh no, clearly something that I'm doing is not working. The NASDAQ is improving. I am not. So, when I look at the total portfolio, my total portfolio returned 1.25% in the last 3 months. And the NASDAQ again is kind of catching up. So, bear steepening is killing me on the long end of bonds, and my portfolio allocation is narrowing its advantage over the NASDAQ. So I want to share a little bit of an analysis on how my portfolio is allocated and why it is losing to the NASDAQ. So let me tell you more. If you are new to the show, you may not know this, but those who have watched it before, you know that my allocation is minuscule to stocks. And in terms of sector itself, I am very, very heavy on consumer staples and industrials because I prepare for war and I am preparing for steep increases in the prices of day-to-day things. Other than that, I kind of ignore some of the other sectors. That is me. Now, on the fixed income side, I still have a meaningful allocation to the 5+ years, like around 5%, 6%. So when bear steepening happens, meaning when the long end of the curve drops, because people say, I'm not going to buy a lot of the long-term bonds, and the price drops and the yield increases, I get into trouble because my allocation on the long end loses value. Those are the two key reasons. My sectors and the fact that I have a meaningful 7-8% allocation to long-term bonds are killing me compared to the NASDAQ. But I want to take stock of where the next couple of weeks are going and how I think it's going to play out. This is my opinion. It's not tax advice. It's not investment advice. I am not a wealth management advisor. I don't do politics and product. Well, the next 2 weeks have tariffs, reciprocal tariffs. What's going to happen with Mexico? The 25% tariffs, which are on a 1-month hold, the Canadian tariffs. The EU may do its own retaliatory tariffs. So there's a lot of tariff-related uncertainty that will stress the markets over the next couple of weeks. Not only that, the unemployment report does not come out until March 7th. So with all this anxiety of people getting laid off in the government, other kinds of restructuring that is happening, the uncertainty and unease that is in the market is only going to get higher, at least for another 3 weeks. The next rate setting, meeting is not for another 5 weeks. Where I'm going with all of this is there is a lot of news about tariffs and counter tariffs. There is a big long gap between here is how unemployment is doing and therefore is there a response from the interest rate side. In the meanwhile, this uncertainty is potentially going to create a blip in the market. What do I mean by that? Just look at options in the long-term bonds. There is a multi-million dollar option purchase that is growing. More people are buying it. And that effectively says that 10-year will reach 5%, which means there will be a 10% increase in yield from what is now 4.5% to 5% in the next 5 weeks. That will rattle a lot of things if it happens, and yet that is the option that is getting sold a lot, so watch out. Speaking of inflation, and Inflation is something that will indeed rattle the long-term end of the bond market. Egg prices are back to the all-time high, the COVID high. We are back with that on egg prices. And you sit here and go, oh my God, why is that? This must be destroying a lot of things. Well, the big egg is cracking, pun intended. Cal-Maine Foods dropped by 12.5% on Friday. That's pretty shocking. And you look there and say, well, why is Cal-Maine Foods dropping? Turns out one of their big holders sold their stake or a very large portion of their stake. In the meanwhile, the company itself has a market cap of 5 billion and an enterprise value roughly 800 million less than that. Here's what that means. Cal-Maine Foods has no debt and 800 million in cash. And they're sitting on it and they're making acquisitions, they're buying feed mills, and somehow their stock is crashing. They have met earnings expectations for every quarter in the last 4 quarters. Their earnings per share, after the little bit of a dip when egg prices suddenly crashed, their earnings per share is only going up. Their revenue is only going up. That's a very interesting paradox. So, with all of that, I wanted to understand what is driving prices. Well, it turns out that one of the drivers of prices is cage-free eggs. And this is a dated article, it's 2021. The state of Nevada said, you know what? All eggs and egg products should be cage-free, and it's terrible that we're putting chicken in these cages, and we need to put them in cage-free locations to get eggs sold in Nevada. Well, what does that do if you're a chicken farm? Instead of putting them in crowded cages, you now can only have fewer hens, egg-laying hens, in a square feet, and so that drives the price of eggs up. So the state of Nevada said, we tried this, egg prices are at an all-time high, so we'll just suspend the law. We'll go back to, sure, I'll take caged eggs. And they're going to try it. This law just passed last Friday, and Nevada is going to see if they can somehow decrease the price of eggs. Ironically, here's what it really does. At a time when bird flu is killing a lot of chicken, if you have fewer eggs per square feet, then the odds of bird flu spreading is lower. If you go in the reverse direction now and you say we don't need cage-free anymore, the spread of bird flu will increase, not decrease. And if you cull those birds, and remember, culling birds does not cost the egg farmer money. The government pays, the taxpayer pays the egg farmer to kill the infected birds in the interest of public health. And therefore, if you have an egg farm and you are moving from fewer eggs per square feet to more eggs per square feet, and you create the risk or increase the risk of bird flu and you cull birds, it doesn't hit your earnings in reality because you get paid by the government. However, it will drive up the price of eggs, in my opinion, even more. So how does that inform my investment thesis? Well, I kind of unfortunately believe egg prices are not going to come down. We got some tariffs and counter tariffs coming. Eggs are not something that you exactly are going to import from Asia. You're going to grow them locally. And now that you're moving from cage-free eggs to caged eggs, you're now going to make more profit because it's cheaper to produce it. And if you cull the flock, you make the money back. So what it really does is it will probably decrease the supply while demand either increases or stays flat. And so that is actually going to drive prices higher. Margins, in my humble opinion, are going to increase because if you can keep bird flu away and you pack more egg-laying hens per square feet because you no longer need to do cage-free, then you're going to make more profit. In other words, no matter who wins or loses, the egg producer wins. Here is what I did based on that information. I bought even more Cal-Maine Foods. So thank you for letting the stock crash by 12%. I increased my holdings of Cal-Maine Foods. Well, speaking of holdings, let me tell you what I have. I did buy a contrarian play. I bought an antimony miner in the US because I expect some of these counter tariffs to come back and hit our rare metal supply. And of course, I bought Calmain Foods, and my war stocks, they are not doing hot because the whole idea is that somehow there is going to be peace both in Israel and in the Ukraine because of a lot of the changes. And I'm so sorry, I don't believe in that either. Unfortunately, as a civilization, we don't appear to be able to live peacefully. And so war stocks are crashing, and I'm probably going to add more to my war stocks, more to Calmain Foods. You do you, and I'll give you an update in a week. Share your comments, and thank you for watching Yield Nerd.